The last 2 years have been the best years for the stock market. The S&P 500 grew by almost 100% from the 2020 crash. In contrast to this, it's rare for this to happen. Historically, you can anticipate around 10% at best, and if we're being conservative, then 8% annually. But we entered 2022, and in January, the entire market imploded. The S&P 500 dropped by almost 10%. Apple, Tesla, Meta, and everything they touched disappeared. The monthly damage was the worst since March 2020. However, although this negative trend occurred in the stock market, the housing market keeps growing. Low interest rates have had an immediate impact on the market, and people have been anticipating a crash for some time. So why is the market still growing? Why didn't the market crash already? We can answer every question that arises, but before we do that, make sure to subscribe to the channel. Don't forget to click the notification bell so that whenever we upload a new video, you will be notified. Please give this video a big thumbs up. If you have any consult or opinion about this video, leave the comment below. The housing market is reasonably predictable and can be run by the government with little effort. There is usually a requirement for a home because everyone needs a roof above their head. And even if you are able, a house is one of the most significant investments you can possibly make because it brings in plenty of revenue. The demand to have a house will continue to exist, though it'll fluctuate according to the prices. From 2017 until 2020, home costs did not grow since the economy was at its peak. If they were increasing before 2017, all property investors could have found stagnating in the housing market. Mortgage interest rates hovered around 4% to 5%, which reduced demand for homes, but 2020 brought in the lenders to offer them about 0%, reducing the interest paid on mortgages. Purchasing a home priced at 1 or 2% is one of the most significant financial decisions you will ever make. This is what caused the need for such low rates and made them increase by more than 20%. The moment these low rates come to an end, that need will start to decrease, which is exactly what analysts have been expecting all along. But guess what? The Fed did not increase the rates in the past 2 years. They've remained approximately 0%. At the time of this article, mortgage rates are higher than they were in 2020. As chairman of the Federal Reserve, Jerome Powell had previously stated their monetary policymakers aim to boost interest rates in the spring, but that may be difficult since the funds often don't make what they state until they actually do or misrepresent the facts to avoid agitating the market. They said around 2020 and 2021 that inflation was not an issue for the Fed, even though they knew perfectly well that it was, and they made people think it was nothing to worry about. Yet they did their very best to believe otherwise. Despite everything, rising rates are bound to happen again soon. It's a common occurrence. If inflation is higher than 3%, that is unsustainable. Will the market crash when the rates of interest are increased? Possibly, no. Ever since the 2008 market crash, the supply of residential buildings has fallen increasingly. This graph accurately shows how few houses have been created since that date. The government understood that in the event of not controlling the housing market, we might not see another such a disaster. So the sale of homes was already tight, which kept the housing prices rising steadily. Nevertheless, the pandemic destroyed whatever was left of the supply chain. Although we're nearly reached the end of the pandemic, the supply chain has taken over a year to recover. So if mortgage rates will go up, it will not influence house costs because there aren't enough houses to sell. We've been building up this supply chain since the end of World War II. For example, to make a single Timberland boot, the materials would be delivered from at least 5 different countries to an affiliate operating a factory in Thailand, where it will be assembled and then shipped throughout the world, including the United States. A factory shut in one area can cause issues for the nearby supply chain. That's why several companies are transforming their future manufacturing lines to get around the new threat. For example, by moving their facilities to the desired location to sell. However, it will take a lot of time because learning to live with the current pandemic is required. About 91% of residence development companies surveyed by Zonda are experiencing supply chain difficulties. The shortage of materials is making it more difficult to build a house, and the delays and higher costs of production are contributing to the rising cost of houses. This is the worst it's been since at least World War II. Other factors besides these are not the only ones affecting home sales. Corporations are buying residences to rent. About 20% of homes are purchased by corporate companies, further reducing the supply of houses. The greatest threat is inflation, though. Inflation has a deep psychological impact. People may be less likely to sell their homes if they're expected to increase their prices in the foreseeable future. Builders are considering selling real estate to investors now, hoping to make a 10% bigger profit by the end of the year. So, as long as there's a lack of homes and other types of supply in the market, home prices will continue rising. Nonetheless, it's not likely that inflation will be resolved or that supply chains will be restored, so prices are likely to remain high. So what makes the United States Federal Reserve look motivated to increase the rate? It is the Fed's role not just to tackle inflation, but also to make sure the economy grows. It's been unpredictable over the past 2 years, so no one can be sure. At first glance, it looked as if once we produced a vaccine, the issue would be solved. However, the government could not successfully vaccinate enough people. Secondly, new virus variants kept coming out that were not covered by the current vaccine. Therefore, the people who have initially received the vaccine have to continue taking it. It is a continuing emergency. Most government officials learn that we can't eradicate it, no matter how harmful this disease is. Even if we do, it will come with such a high financial price that it's not worth the effort. We are learning how to live with it. The Federal Reserve is keeping interest rates low for the time being until it is clear how the economy will do under this new set of restrictions. We anticipate property values to increase between 5 and 8% this year. Even if borrowers cannot pay on their mortgages, they can still sell their properties with profit because of a lack of homes for sale, in which case we don't see a housing collapse this year. If the Federal Reserve manages to bring down inflation to under 3%, things will become more apparent. At the end of the day, these are predictions based on the facts on the ground. If you liked what you learned in this video, don't forget to give it a thumbs up and subscribe to our channel so you never miss out on our tips. Thank you so much for taking the time to watch this video. I'll see you next time.